Hey there, in this video, we're going to talk about predicting support and resistance using Fibonacci Confluence zones. And I want to give a couple brief examples. And this is just sort of a simple way to help give you an edge when a pullback is occurring and you're trying to find where the pullback is going to hold. So in this example, we're going to do a bullish one and a bearish one. So our bullish example in this one's going to be, this is BBD. And we're looking at a weekly chart, and this is, I think, mid-2011, and you can see that BBD had kind of broken out. We had a nice little pullback, and then we had a run, and this is kind of outside the pullback stuff, but you can see that if I duplicate this run and kind of just tack it on here, you can see that we had a one-to-one symmetrical move. So this would also be a good spot to kind of look for reversal, and in fact that's exactly what happened. This one-to-one symmetry predicted where the reversal would take place. So the fact that this is happening kind of gives you an idea that BBD is respecting Fibonacci levels, so it just kind of furthers our point. So so in the initial move, we had seen this, right? We pulled back to the 382. What made us think that the 382 might hold? Well, there's some previous resistance here, so that actually did hold. We broke out, finished the one-to-one move, and if I take this off, or what a lot of people do is take this off and say, okay, the next move is from here to here, right? And now we're pulling back, and it's like, well, where do we stop? Are we going to pull back to the 618? Is the 50 going to hold? Are we going to pull back to all the way back to this level? We have different sort of levels we're looking at. By just looking at this, the 618 and the previous resistance looks like a good place it might hold. But what you can do to kind of help yourself out is go ahead and draw another grid from the prior swing low to the recent swing high. And you can see, and what I'm going to do here is actually, I'm going to change the color of this grid just so we can kind of tell these apart. You can see that the 618 that we just talked about from the most recent move coincides almost exactly with the 382 of the large move. And this is partly because this thing is respecting fibs and we got the one-to-one move. So you can see this is at 1808, this is at 1807. So our first sort of logical area of support that we would want to look at, a potential reversal, is going to be this 18 and low 18 range, right about 18 and change. The second level we would look at for support, or maybe a stop if you were to, maybe get a reversal candle or some kind of trigger to enter a long trade here, you may put your stop at this second level where the 50% of the large move coincides with the 786 of the previous move. So we have two levels here that seem to be, giving a good indication that this is where support's going to hold when this thing starts to pull back. And you can see as we kind of go through time, let's just kind of scroll through this, you can see that, and this is pretty much what happened. We held here, came back, we broke the first level support, came down and found support at the other level, and then sort of made our way back into the top part of the range here. So that's just one way you can kind of help predict support to get some reversal points. The next one we're going to look at is BK, Bank of New York. We're looking at a weekly chart, and this is kind of towards 2011 starts here, and you can just see this downtrend. So if you just pick the swing highs to swing lows, and once you get down here, you're going to say, okay, this thing starts to pull back. Where should I expect a reversal? And you can see the reversal happened right here about 22.5, and it's now making its way back down. It's making reverse back down to the lows. So if you just, we'll do a quicker one here. We draw a fib from the big move, right? We had this swing high, and we ended up with, kind of consolidated here and then made another move. And so when you're looking at here, you can see the first kind of level that we would want to look at is where the 382 and this 618 sort of came into play. And you also have this this 382 of the big move. So you see this little cluster of lines, and when you see those little cluster of lines, you know, that's a lot of resistance it has to get through, and you can see it did not get through this. It got right up to the 618 of the most recent move, and then just slammed itself back down. Now, had you taken a trade in here, you could have put a stop above the next cluster, which would have been the 50 and the 786 that you see here. So, you know, this is just a way to kind of help your Fibonacci trading by finding confluence zones. And basically what we're doing is we're overlapping grids to find clusters of lines. And obviously the tighter that these lines are, the more likely, more precise a target you're going to find. So hopefully that helps, and we'll talk to you later.